Ladies and gentlemen of the XRP community, let's begin with a clear look at the current landscape. Today, November 16th, 2025, XRP is trading at $2.19, and there's considerable discussion among analysts about potential growth trajectories, including projections that could see it reach levels around $317.80 by December 1st under specific market conditions. This comes in the wake of the recent XRP Spot ETF launch, which has shown notable trading volume on its debut day, one of the higher performing ETF introductions this year, according to public reports. We'll break this down in detail with data from on-chain metrics, network activity, and analyst models. To be absolutely clear from the start, I'm Leo, providing an educational overview of crypto market trends, and this is not financial advice. Please always perform your own due diligence, research thoroughly, and consider consulting with qualified financial professionals before making any decisions. To set the foundation, let's examine the ETF launch more closely. Public data and posts on X from accounts such as at Ripple, XRPIE, describe the event as generating significant interest, with day one volumes standing out compared to other recent ETF debuts. This type of product allows for exposure to XRP through traditional financial channels, potentially bringing in new participants. Historical precedents with similar products for other assets, like Bitcoin, have shown periods of increased activity following approvals, and we're seeing early indicators here with XRP. Moving to network fundamentals, which are crucial for understanding any digital asset. Recent on-chain analysis reveals a 200% increase in network activity over the past 48 hours, as highlighted in posts by @RippleWinkle. This includes a surge in transactions, which can be a sign of growing usage or preparation for larger shifts. Further, data from sources like Glassnode and Santiment, referenced by @skipper_XRP, indicate 716 transactions exceeding $1 million each in value within a 24-hour period, the highest such figure in the last 4 months. These large movements often involve institutional or high net worth participants repositioning assets. Institutions play a key role in this narrative. For example, Canary Capital has been reported to increase its XRP holdings to over 120 million tokens, with details shared via @Steph_is_crypto on X. This is part of a broader trend where financial entities explore digital assets for efficiency in areas like cross-border payments. Ripple's on-demand liquidity service, which utilizes XRP, processes substantial volumes, reaching into the trillions quarterly based on official reports, with partnerships involving over 300 financial institutions worldwide, including major banks in regions like Japan and Europe. The infrastructure supports real-world applications, such as fast, low-cost settlements that take mere seconds compared to days with traditional systems. Now, let's delve into supply dynamics, an essential factor in price modeling. Approximately 56 billion XRP are in circulation, with around 3 billion available on major exchanges at any given time. The remaining supply is managed through an escrow system that releases 1 billion XRP monthly. Though much of this is often relocked or used for operational purposes, creating a controlled flow. When demand increases, such as through ETF inflows, this limited exchange liquidity can lead to notable effects. Analysts apply various tools, including Fibonacci extensions, starting from the current $2.19 price point, to project potential outcomes. In scenarios involving $10 billion to $50 billion in ETF assets under management by month end, models suggest compounded upward pressure, arriving at targets like $317.80 by December 1st. These are mathematical projections based on historical asset behavior post-ETF, not certainties. To make this more relatable, consider an analogy. Traditional international wire transfers are like sending a letter via postal mail. Reliable but slow and costly XRP in systems like on-demand liquidity acts more like email, near instant and minimal fees. This efficiency is why over 80% of financial institutions in certain markets, such as Japan, have integrated Ripple-related technology. Additionally, compliance with standards like IS/O 2022 positions XRP well for future banking integrations, including potential roles in central bank digital currency bridges. Addressing frequent community questions for clarity. One common inquiry is why the price hasn't reflected the ETF news more dramatically, yet on-chain patterns show phases of accumulation where large holders redistribute supply without immediate price impact. For instance, addresses holding 1 to 10 million XRP have reduced balances, while larger wallets absorb the difference, indicating no widespread selling pressure, but rather consolidation. This is similar to build-up periods observed in other market cycles. Another point of discussion: variability in analyst projections. At EGR, AGCRYPTO, on X shares, detailed simulations, including chart patterns like pennants and triangles, with short-term average targets around $11 and higher extensions up to $47 or more under full adoption scenarios. Industry reports from firms like Bitwise project the tokenized real-world assets market growing to $50 billion in 2025, with the XRP ledger contributing through its capabilities in DeFi and asset tokenization. Total value locked in XRP ledger. DeFi has increased 300% year-to-date, demonstrating expanding ecosystem utility. Expanding on regulatory context, which underpins much of this. Following legal clarifications in 2024, confirming XRP's status in certain jurisdictions, the path for products like ETFs has opened upcoming frameworks, such as Basel III, encourage banks to diversify reserves with efficient digital tools, where XRP's characteristics align well. Public filings and reports suggest additional ETF applications may be in review, potentially leading to a cascade of approvals similar to what occurred in other asset classes. Let's explore scenario-based analysis for educational purposes. Scenario 1. Conservative inflows of $20 billion into ETFs by December. With current supply constraints, this could result in moderate upward adjustments, perhaps to the $10 to $15 range based on multiplier effects from liquidity. Scenario 2. Base case with $50 billion assets under management and steady bank adoption. Models here scale to $80 to $100 levels. Scenario 3. Accelerated institutional rotation, including 1 to 5% of global cross-border flows shifting to XRP rails, pushing toward higher figures like the 317.80 projection via exponential compounding. These are hypothetical illustrations drawn from supply-demand equations and historical data, emphasizing the role of adoption velocity. Community insights add valuable perspectives. Posts like those from @XRP CryptoWolf discuss Ripple's visual updates, interpreting them as signals of deeper financial integration. Chad Steingraber analyzes positioning ahead of catalysts, while Paul Trujillo shares longer-term cycle views with potential spring targets in the $50 to $100 area. Healthy debates on X, such as those involving @NoShuS_589 on multi-year ranges, help refine understanding without promoting unsubstantiated claims. Myth clarification continues. Concerns about centralization are addressed by the XRP ledger's structure, over 150 validators from diverse entities, open source code, and decentralized consensus mechanism. It's designed for enterprise-grade reliability while maintaining distributed control. Diving deeper into on-chain education. Tools like XRPL Explorer show transaction speeds capable of 1,500 per second, with potential scaling to 65,000 via upgrades. Fees remain fractions of a cent, making microtransactions viable. This contrasts with higher-cost networks and supports use cases in remittances, where billions in value move annually through RippleNet corridors. Historical parallels for context. The 2017 cycle saw XRP appreciate significantly from increased awareness and early adoption. Today's environment includes mature partnerships, regulatory progress, and institutional products, creating a more robust foundation. Liquidity deep dive. Exchange balances represent a small fraction of total supply, amplifying impact from sustained buying. If ETF daily volumes maintain even a portion of debut levels, cumulative effects build over weeks. Model mathematics explains step by step. Current market cap approximately $120 billion at $2.19. Add $10 billion demand against $3 billion exchange supply. Initial multiplier around 3 times on that portion factor in velocity from ODL usage trillions quarterly, and reduced selling pressure, compounding at 15 to 20% monthly in bull scenarios, yields elevated targets for $317.80 specifically. From $2.19 base, apply 1.618 Fibonacci extension across projected inflow waves, aligning to December 1st timeline in optimized models. Broader market trends. Fed policy easing has unlocked trillions in capital, per economic reports, flowing into alternatives, including digital assets, tokenization of treasuries, and other RWAS is accelerating, with XRP ledgers AMM and smart contract features enabling this. Community examples. Users like at Moon Lamboyo discuss practical business integrations, while at Investory tracks whale movements in real time. Educational block on DeFi. XRP ledgers, automated market makers, and lending protocols have seen TVL growth, offering yields without intermediaries, partnership expansions. Santander, SBI, and others route real volume, reducing reliance on speculative trading for value. Future considerations. Potential CBDC pilots on XRPL could bridge public and private sectors. Recap of core elements. Strong ETF debut volumes, elevated whale transactions, 716 in a day, 200% network activity surge, extensive partnerships, 300 plus, escrow managed supply, analytical models projecting up to $317.80 in high inflow cases. Extended scenario details include variables like approval timelines for additional ETFs, adoption rates in remittances, currently trillions processed, and macro liquidity conditions. Analogy extension, XRP, as the efficient highway in a world of congested roads, faster throughput, lower tolls. Ex-post integrations continued at Arthur Brighto BTC on ecosystem developments, at 25 hours awake on related token launches enhancing XRPL. Myth series, no evidence of net outflows, redistribution points to strength. Data visualization cues implied, charts of transaction volumes, supply distribution, Fibonacci levels. Closing educational summary. This analysis compiles public on-chain data, official reports, analyst simulations, and community discussions to illustrate potential dynamics. Projections like $317.80 represent specific model outputs under assumed conditions, serving as learning tools. If this detailed breakdown enhanced your understanding of XRP trends, please like the video to support more content, leave a comment sharing your key takeaway or a question for future videos, subscribe for regular educational updates on crypto markets, and share with others interested in informed discussions. Staying educated is key in this evolving space. Leo signing off. Further extended educational segments for comprehensive coverage. To ensure thoroughness, let's expand on regulatory evolution. The 2023 to 2024 court outcomes provided clarity on XRP's classification for secondary markets, enabling US-based products like the spot ETF. Globally, frameworks in the EU and Asia support digital asset integration into finance. Tokenization mechanics, RWAs, involve representing real assets on blockchain for fractional ownership and liquidity. XRP ledgers' built-in features, like issued currencies and DEX, facilitate this without needing wrapped versions. Historical data review, post-2017 peak, XRP consolidated during bear markets but maintained utility growth. Current cycle shows higher baselines in volume and partnerships. On-chain advanced metrics, active addresses up, dormant supply moving strategically. Velocity calculations. Value transfer divided by average supply indicates efficiency. Institutional reports, JP Morgan, CoinDesk, and others forecast digital asset adoption in payments reaching multi-trillion scales. Community health. Diverse viewpoints on X promote critical thinking, from technical analysis to fundamental reviews. Projection variability education. Models incorporate assumptions, inflows, adoption curves, external factors. Sensitivity analysis shows ranges from modest to expansive analogy series, like evolving from cash to digital wallets. Convenience drives adoption. Scenario matrix. Low, medium, high across timeframes, with probability weights based on precedents, Partnership case studies. Specific corridors like Philippines remittances, saving millions in fees annually. Supply schedule details. Escrow since 2017 has released predictably, building trust liquidity pools, XRP, LAMM, launched recently, enhancing DEFI depth. Future upgrades, sidechains, interoperability for broader connectivity. Recap extended. ETF as entry point, institutions accumulating, network scaling, models educational. Engagement reinforcement, like, comment thoughtfully, subscribe, share responsibly, knowledge empowers.